Hey everybody, what's up? Welcome back. Today we are looking at analog devices, courtesy of this comment. Don't know much about the company. I know they're into technology. They have some of the greatest stock charts I have ever seen, only up basically for months and months and years. Couple things. Make sure to comment if you want any specific companies. That's kind of how I do some things. Sometimes I find my own. Sometimes I just do companies that are trending. But if you comment, I will try my best to review whatever company you want in a reasonable amount of time. Make sure to subscribe if you haven't yet, and let's get into analog devices. All right, hello everybody. This is Analog Devices. We're going to go through their financials first, and then we'll take a look at their chart and then their earnings reports. So let's get right into it with the snapshot here. So we can see cost of capital right here at 8%. That's pretty solid, one of the lower ones I've actually seen. Their Tiger price is at 253, which is coming in pretty significantly above their 223 current price. Looks good there. Long-term growth rate at 14% looks really good. Let's go down here to their income statement and see how everything is looking with that. So sales actually look like they took a pretty significant dip in 2024. And if we zoom out here, we can see that a little bit better. So overall, again, now this could be another situation like some other companies I've seen where they had a massive growth following COVID and are now returning to their normal growth. However, I really don't know too much about the company. I haven't followed it too much, but so I'm really not sure exactly if that would be the case. But what I can see is that they had a peak in quarterly sales right around April 2023 and have since declined nearly every quarter until the last two quarters that you can see here. So overall with sales, that doesn't look great. Now they do have 2 quarters worth of increases. We'll see later if their net income, if their ratios look any better, which it honestly doesn't look like it considering their net income kind of decreased along with everything. But we will see what the ratios look like. So overall, I'm going to do a 0 for sales. For operating income, again, it'll probably be the same thing. Looks like it really just peaked a couple of years ago and has not recovered since then. Now, it looks like they are, again, growing their operating income back up as well, but overall, it's basically the same story. In the quarters, it is declining up until about a half year ago. Now, for net income, we're looking at the exact same thing. Income is actually higher than it was 4 quarters ago, which we're seeing with sales and operating. So overall, again, a 0. And if we go back out to the years, we can look at the EPS and their total shares. EPS, again, does not look great, fairly low. Even pre-2021, it is below that. Not fantastic. Total shares, we are looking at slight increases, although decreases actually from 2021. So it looks like one part of their problem could have been issuing a very large amount of shares in 2021 and seeing a ton of growth from the money they got from that, but now they may be having trouble sustaining it possibly. But overall, pretty much flat in the shares in the past year and a significant decrease from 2021. So overall, that's pretty solid there. And then again, with EPS declining over the past 4 years, not the greatest. Let's check out their balance sheet, see how everything is looking. So for cash, we're seeing a pretty decent amount. Not a big jump like I was sort of expecting for 2021, but overall fairly decent. You can see compared to their short term, it's really last year they actually didn't have enough to cover their short term, which would be concerning, but this year they have plenty. So overall, that is pretty good. Assets actually have been declining for about 4 years now, which is not fantastic. Now, if it was sales growth and their assets were declining, that's something else. If their costs were decreasing, perhaps if their net profit was stable or increasing, that would be something else. But they're not. Their assets are declining. And for short-term debt, again, looks pretty good. Completely coverable by cash, at least this year it is. And then debt overall, again, is not decreasing. Fairly high short-term. Even though it is coverable by cash, it is fairly high compared to anything in their past, which is not the greatest. Can see they took a ton of debt out in 2017 and have not really they're essentially at the same spot, a little bit lower, but overall for total debt, I'm going to do a zero point 0.5 because short term is coverable. Long term, honestly, isn't crazy even compared to their cash. I mean, they could pay a significant amount of it. So overall, not too bad. And then for retained earnings, we actually have 10 billion in retained earnings, which usually for a company that has 10 billion in retained earnings, you would think that there would be a significant amount of net income growth possibly, but overall not really. But retained earnings still looks really solid. Let's check out their cash flows. Maybe we could see where some recent problems are coming from. I don't think so, but possibly. So overall net operating cash flow is very positive, almost entirely funds from operations, which is good. Other than that, we're not really seeing anything that would be concerning for operating cash flow. For investing activities, we're seeing a lot of capex, which is basically normal. Shouldn't expect anything different than that. No acquisitions recently. Or actually sold a lot of fixed assets and businesses in 2021, which could possibly explain the spike in sales followed by the decrease. That could kind of explain that, but overall investing cash flow looks decent. And then for financing cash flow, I was honestly expecting this to be positive, but you could see they have been issuing a lot of debt in the past 2 years. That kind of shows up in that short-term debt area where they had, I believe, a little over $1 billion. Other than that, debt issuance is a little bit of a rough spot. Overall negative financing cash flow, which is good. It looks like they've been paying off a lot of stock and then paying dividends, which is fairly solid. Now, I think I'm going to go with the full credit here only because if you look at their free cash flow, it is also positive and fairly stable as well, which is a very positive sign for the company. Now, although they have been issuing debt, it really has not affected their cash flow significantly, at least in my opinion. Let's go into their use of cash and we can see what we see. So overall debt issuance, again, has been picking up in the past 2 years. Actually not nearly as significant as 2021, which you could see over 4 billion. But one thing to note is every time they issue, they pay off a very significant amount. So the years before 2021, it actually looked like they were outpacing it, other than in 2017, where we actually did see that earlier come up, where they took on a fairly significant amount of debt. But overall, in 2022, they paid off more. Last year, they paid off half, or I should say, in the past year, they paid off half of what they issued. And in 2021, they almost matched it, but overall, it's mostly just consistency. So for the debt, I think I'm going to do a 0.5 only because their debt is fairly manageable. And then for stock repurchases, you can see they have been very, very good with repurchasing their stock. They have been consistently issuing as well, but nowhere close to how much they buy back, which is really good for the company. And then let's just check out their ratios, finish it off here before we go into the earnings report. So SGA to sales looks like it's actually at a high right now compared to their 5-year average of 26.8. Overall, actually used to be fairly significantly higher, but right now we're seeing some recent growth in it, which is not fantastic. Net margin, 5-year average of 21. We're at 17 right now. Not great there. ROA, ROE are both, looks like they're both fairly significantly below the 5-year average. Again, not looking phenomenal. And the long-term to total equity is very, very low, under 20%, has been since 2020, it looks like. So overall, fairly decent there. So overall for the company, 53%, which sounds bad, isn't actually that bad. I'm still putting 11. 2024. So overall, if we put it in here, we can see where it falls right around Zim and Snapchat. Actually, a little bit better than Snapchat. I forget what color this is. I think it's green. All the green companies are companies that I personally own. I just highlighted them in here to show that. But overall, ADI not too bad. So now let's take a look at their earnings report recently. I believe they reported last week, which is actually when I got the comment. Unfortunately, I did not have time to make the video, but let's check out their recent report. So we can see it looks like overall miss on industrial revenue, a little bit of a beat in automotive, communications beat, and consumer beat. So I believe that is an overall beat. If you compare the numbers there, it looks like it could be. So seems like their main segment was actually declining while all the others kind of picked up. Operating margin looks like it missed slightly. Operating margin was basically in line, however, significantly lower than a year ago at 44%, now 41%. And then cash from operations is a little bit down, and free cash flow of 885 million, which is fairly decent for the company. Now, if we go, let me see if there is anything else. It looks like there is not a analyst, what's it called there? Analyst report there, but still overall fairly okay earnings report. That operating margin miss is definitely something significant. But either way, this is what I want to show for this company. Their stock growth over the past multiple decades has been insane. Now, obviously, tech companies saw a little bit of a bubble problem here in 2000, as many companies did, but past couple years, they have really seen significant growth. You can see they did overall beat on that earnings report, which is fairly good. We could see some recent news here that just shows their gains, and overall fairly decent. They've had a very consistent dividend for many years, very good growth. Now, will this growth continue, just considering the sales dips, things like that, net margin or net revenue not really coming back from where it used to be? I'm going to assume yes, only because it seems like despite those problems in the past few years here, their stock growth has been significant. So I believe the problems with their balance sheet and everything kind of started around 2021. And since then, they have seen very nice growth. So overall, I'd imagine this company will be continuing to perform very well. They've obviously had very good leadership and a lot of investor confidence considering this. So no concerns there, at least in my own opinion. Again, do all of your own research should you be interested in investing in this. I do not recommend any stocks to anybody, but overall looks pretty solid in my own opinion. So that is it for Analog Devices. Hope you enjoyed, hope you learned something. Make sure to subscribe if you haven't, and I will see everybody in the next video.